Well, we've been at the back of weak global markets since the last few weeks, if not few months, if that's how we can term it. And what we're looking at the moment in terms of the general broader markets is, and global general broader markets, is that they're attempting to recover, but that's not translating in a strong manner at the moment. When we're looking at US markets, they attempted a rebound, but marginally lower despite that. In fact, when we're looking at the Dow, it was absolutely flat in trade, up just around 0.1% or so on Monday. The S&P 500 closed lower by around 0.4%, and the Nasdaq fell 1.2%. S&P 500 definitely impacted by those tech stocks which closed lower. When we're looking broadly at what investors are focused on, well, economic recovery is definitely tepid at the moment, so that's definitely a concern for investors. The other thing that's behaving as a drag is inflation. It's coming in fact higher than even estimates are predicting it. In fact, US inflation came in at 8.3% versus the expected 8.1% last week, and that continues to prove to be a headwind. And the third and the largest point is definitely rate hikes. Most central banks are looking at rate hikes. The Indian central bank as well has accelerated its rate hikes, and that will continue to be a drag on markets. In fact, the Dow has closed lower for 7 weeks in a row. That's the first time that's happened since 2001. So I have to go back a couple of decades to actually look at that phenomena. So definitely a struggle at the moment as we see it. European markets too struggled, with the DAX down around 0.5% or so in trade. The FTSE though was in the green by around 0.6%, so slightly higher there. But largely the trajectory seems to be mixed in European markets. Asia indices though have opened in the green as we speak. In fact, when we're looking at the Nikkei, it's up around 0.5%. Again, tepid there. The Hang Seng is up 2%, but that's largely on the back of that upgrade made by JP Morgan on tech stocks in China, definitely suggesting that Chinese tech stocks have bottomed, and that has impacted Indian tech stocks as well to a certain extent yesterday. The ASX 200 is up around 0.25%. The Kospi is up around 0.2% in early trade today. In fact, when we're looking at the US futures, they're looking at a nice rebound, but it's marginal nonetheless. So really nothing substantial translating in global markets at the moment. Moving quickly on to commodities, oil prices have remained elevated, breaching that $110 a barrel and remaining there. It's at around $113 a barrel. Definitely a sense of concern, especially for emerging markets, including China. Moving quickly on to how gold is looking. Gold is looking soft even now. It's looking at around that $1,825 an ounce mark. Definitely soft at the moment. Moving quickly on to the dollar index and bond yields. The dollar index, which had strengthened very close to that 105 mark, has now fallen off. It's come in at around 104.2 at the moment. So negative cues for the dollar index, but still holding up very smartly. And the US 10-year bond yield too is tracking that dollar index around the 2.9% mark is where it is. Mind you, it had risen up well beyond that 3.1% mark, and it's come back down to around the 2.9% mark. Crypto though continues to be under pressure, with Bitcoin just above, just clinging on to that $30,000 mark. Largely currently the SGX Nifty is marginally in the green, around 0.1%. So definitely positive cues for the moment for Indian indices, but holding on to very marginal positive cues on the back of what is largely the trend globally.